just a few things. Appreciate everybody being here. Let me get our stream going real fast. Welcome. This is the DNX Show. We're here every Thursday, 10 a.m. Pacific, 1 p.m. Eastern. There's two hosts of the show. My name's Todd Ryan. My co-host is Josh Reason. We do this every Thursday, discuss domain name investing, any topic under the sun that's related to that. Sometimes we'll have other topics that aren't, I guess, domain investing. But usually it's always domain investing. So we appreciate you joining us. By the way, you're live on YouTube right now, streaming as well. And if you want to catch replays, of course, you can catch them here on X, on YouTube, and now on Spotify and Apple Podcasts. So letting Josh get situated and we'll get rolling. Here he is. Hey, Josh, what's going on?
What's up?
Yeah, it sounds good today. I doing now things doing it from my iPhone. And Josh, yeah, so now we're pretty smooth. The Spotify and the Apple Podcast, people ask for it, they're getting it. What do you think about this wide distribution? Does it concern you at all?
Yeah. Where was the consent?
Oh yeah, that's right. I guess I assumed you like your voice to be heard from the mountaintops, so I just
No, dude. No,
assumed.
that's not true. I do what I need to do,
um,
but I definitely don't.
Well, we can certainly take those down. That was, as soon as I put it on Spotify. Well, you see the posts. I see. I do it here. We do it on X, and see, you don't even need to record it. But of course, people want to hear the replay. And then I streamed it on YouTube just because there was some older friends of mine. They were lawyers who wanted to listen to both domain name law and the DNX show. And I said, you can listen on X. You don't have to be a member. You can listen to replay. They're like, okay, can you do it on YouTube? So I did through OBS, and then of course I post and I see Shane says, I don't know why they're not on Spotify. They were on Spotify when I did it with Josh. So I'm thought like I can put it on Spotify. Who the fuck wants to listen to this? And then Siger says, when's it going to be on Apple Pie? You guys, do people want to listen to this? Because right, Josh, I'll shut it down too. I mean, who gives a but okay, so we'll do it for another week, I guess. It's just a bunch of work for me. You know how it goes down, right? I mean, well, I guess you don't put things on Spotify or Apple Podcasts. Sherpa does all that, but it's just a headache. But Josh, let me tell you this. So I, I was dropping some names. I sold some yesterday, and today I had to transfer them from GoDaddy. So I got a call from my rep 15 minutes ago, and I missed the call. And I'm like, shit, I don't want him to call while we're doing this show. So I call back in and I say, I reached another rep and I said, can you help me with this real fast? Because I can start a podcast in a couple minutes. And he's like, yeah, his name was Chris. He's like, yeah, I try to catch you and Josh on Thursdays. He's just another rep there at GoDaddy. I said, well, Chris, I appreciate you fucking listening to us. I mean, we try to have some sense about us, but it is nice people that wanting to listen to domain investing, but it's pretty nice, huh, Josh, to know that just some reps at GoDaddy are listening to the show.
Yeah. I mean, they're all there's more than a few. They're all listening anonymously. I know you're there because every week I'd get on the phone and they tell me, "Oh, I heard what you said on this." I said, "I didn't see you in the crowd." I know they're there.
Yeah, there's a lot of me too. And I used to say, I have an app that will show me who's anonymously listening, and it doesn't. But I just say that to get the people because they think, damn, that can't even be anonymous. But in domain space, people love to be. We're going to have a lot of different topics today. Before we get rolling, Josh, um, yeah, I thought that was neat that that there are people that say they listen, who I just appreciate somebody taking time to listen to it. And then some of the people that are over in some of the countries, basically where it's midnight right now, they want to listen. And that's why I thought we make it available for them too. So we'll do it until we get sued. And you and I can talk about if you really feel a certain way, but it's your show, so we'll do what we need to. I'm surprised. This is week 26. we've done a half a year. It's a lot of domain talk. You had a good space yesterday. I was got my stuff done, walking my dogs and feeding my horses while you were doing your space. And I got some topics from there I wanted to touch on, but you pretty much beat them up. But anything on your mind that you want to
No,
touch
man.
on
No,
today?
man. No, man. You've done a fantastic job since we started doing this 26 weeks ago or whatever. So I appreciate you, and yeah, keep it up.
And well, thanks, Josh. And also, I was going to say sometimes people say, uh, "Yeah, we're like oil and vinegar." Oil and vinegar actually go together. That's a bit of oil and water, but no. I think definitely, we'd probably be a better, we'd be a better morning team where we can play music. So give us both a break. But okay, so um, quickly, I got a lot of topics wanted to touch on, but so I did hear Ollie was saying the pickleball thing you got to sign up for at NamesCon. I haven't signed up for it. I certainly am because it seems like what a, sign in, but what a fun Tuesday night. Nothing to do. People are going to eat and then at least go over and check it out. I'll probably play, but I don't, I like just having some fun with the people and watching usually the older guys, hurt themselves. I am a prick. So okay, but Josh, did you sign up for it already? The pickleball for NamesCon?
No, I probably won't do that. I'll
Just
just keep
he,
keep living my life.
well, I got you. Well, he was saying CloudFest, a lot of the CloudFest guys really signed up, so he was hoping some domainers would at least do it, domain investors from the domain side, because didn't want the CloudFest guys thinking they're all that great. But I got you. If you're not going to do it, there's a few other. I know there's plenty of domain investors that'll do it. That's their big thing. So, but maybe we'll go over there and at least cheer them on if there's nothing going on. I don't know what. It's always fun at the events at NamesCon, just that first night to sit around the bar, sit around the lounge before everything gets going, and really just say hi to everybody and see everybody as they're coming in. And it's going to be a good time. I know that. Do you plan on going down there, just driving down on the Tuesday and then staying till Friday or Saturday?
Monday to Friday.
Yeah, I think I got to fly out Friday early. So, I mean, or no, I'm sorry. Yeah, would that be Friday? Yeah, Wednesday and Thursday are the main session days. Well, everybody, we're going to jump into the topics, but as you know, it's open discussion. So please raise your hand and say, hey, I want to chime in, or I want to ask Josh about this. But Josh, so first I wanted to get to, I was going to drop a bunch of names from my portfolio, or not a bunch, 30 names. And I thought, it's a waste of time to even sell them for 25 bucks, especially when you got the big bucks like I do. Anyway, it's just silly but I think we get on these spaces, I was thinking really about these 4,000 names that you got, really more find that next year you say you may end up dropping some because you're
Probably
going to
not.
see
Probably not.
see
But
how they
I'll
work.
I'll I'll see.
Yeah. What do you think about
I just
a
think just
potential for a
quickly on that
liquidation today?
topic.
Yeah.
Quickly on that topic.
Yeah.
One of the reasons why is I don't time names need time to mature, and I don't think a year is enough.
Yeah, I felt that way even for the meta names. I kept them. I made my money back the first year, but about like 4 or 500. But I agree, 2 or 3 years. But what do you think? Tell us two things about DNX, and that is what's going on with the auction, and then do you think there's room for a liquidation section of the platform in the future?
Um, there's room for everything in the future. I'll just make that clear. Um, there is room for everything. In terms of the auction, a little bit behind schedule in terms of opening up for submissions. I don't want to rush it, so when it's open, it will be done properly. Um, but yeah, I mean, in essence, we'll just simply we'll be running a quarterly auction. It will be a curated auction. It will go on for a week each quarter. Um, and yeah, and then I'll provide more details when the first one is scheduled. Um, but yeah, absolutely, there's room for everything, and I think that that will come to light in the next couple of weeks when you see our next kind of like big update. Um, there's going to be a lot more that we're doing. We have a lot more going on in the background. Um, so yeah, I mean, what you see from some of the bigger players, um, or what are deemed to be some of the bigger players, will be we'll be doing some similar things.
Everybody here knows, this isn't, we call it the DNX show because domain name X can mean a lot of stuff. It's about domain investing. Josh happens to, operate a website, DNX.com. And I said, yeah, I like DNX because DNX can mean a lot of things. So it's not necessarily about DNX, your website, but I do like to ask a lot of questions though. And I'm interested because um, when you with regards to simple things people always request about search capabilities or be able to search these patterns of names and stuff like that. So what types of updates, just quickly, are you going to be in this next thing? Is it going to be updates to search plus new other features? But I mean, like, what do you guys behind the scenes, sort of, how does it go down and how do you decide on, what is at the top of the list for updates?
Yeah, I mean, over the last 6 months or so, we've been working on a pretty, what I believe to be a pretty good, let's call it a domain management system. Um, and I've been testing it with my own portfolio for a while. And, um, there are various features included in that kind of tie into what you see today in the marketplace. Um, Domain monitoring, so that basically monitoring when names hit the market or when names have an update to the who is, just about anything related to specific names. So you can monitor a bunch of names at the same time, which will trigger email alerts and what have you. And then those of you that follow me closely will see kind of like some of the landing pages that I use for some of my names. Um, Tiger.com, for example, TIGR.com. So what you see there. There's a whole system on the back end, right, where we've developed a bunch of landers. We have a whole inquiry system, um, which you can manage from within the platform itself. Um, Bunch of different kind of like automation for lead management and your landers, and then tracking your own domain prices, tracking how many TLDs your domains are registered in. Um, you know, the list goes on and on of things that you can do, but that I would say sometime next week, uh, we'll begin opening that up to everyone. Um, and yeah, it will be free. So
Yeah, as we go on, this is for the crowd. Anybody has any questions about the platform, ask Josh, and because I have some others, but we'll get on to some of the topics I have for today. Josh, this is a question I wanted to ask you, but still others as well. And now I'm sounding like Ish, where at the beginning of the shows, we stay down in the crowd, and Ish is like, "Is anybody going to come in and start talking? I want to shut this thing down." I'm not going to shut this down. I got plenty of shit to talk about, plenty of questions to ask Josh, but I would like to hear other answers to this first question I have for Josh, and that is, how do you use expireddomains.net? I mean, a lot of us use it in just I guess, a basic way,
yeah,
but tell us, do you use it frequently and how do you use it?
yeah, I use it every day. Use it for mostly for auctions and drops and sorry, someone just called me. Did I cut out there? Mostly for auctions and drops uh, and registering names that are available and a host of different things. So expired domains is a powerful tool. Um, and yeah, I mean, I use it every day. It's got great filters. Um, yeah, yeah. I mean, I would say that most people probably use it for uh, going through drop lists, going through the pending deletes, placing back orders, and then um, going through GoDaddy expired auctions. I would say that, and some pseudo names as well. I said those are the main ones.
What are there any similar tools? It's been around forever. I mean, everybody, in our industry knows about it. Like outside of the domain space, people wouldn't know expired
Yeah, I mean, I think a
domains.net.
lot of people take these kind of things for granted, right? And it looks fairly simple, but I'm telling you, like, it's just not easy to build something like that. It's taken Marco um, a long, long time to build what he has and keep improving it. And yeah, I mean, these things are the reason why you don't see many of them is because these things are just not easy to build. So yeah,
And
yeah, I mean, they do a fantastic job.
yeah, I just sent Bruce a discount code in the back channel. Speaker 20 if you're going to
Speaker 20.
NamesCon. Yeah, if you're going to
Yeah.
NamesCon. But Josh said I know
Oh,
they were sending.
I heard you talking about
Yeah,
that auction, the
yeah,
auction the other day when you were doing your $25 auction. I'm going to be on because the domain Sherpa guys will be basically be doing a panel on the names in that auction for NamesCon, and I'll be on that panel. So I'll be talking about those names.
cool. So next week, Monty's going to be here with Scott, and I told him to come in during our second hour next week so we can get the thing warmed up for him, and then Monty can tell us about what names are there and what is the still time to submit. It's pretty late, to submit, but if you got something really great, um, or pretty good with no reserve, because I'm thinking about, I'm wanting to do it. I just love to have stuff in the auctions, even if they only go for 500, because I think no reserve there is 300 or 500, and I hate the did, but I loved going to the events and then knowing, so I sold a couple names for $1,500, and it was fun. Plus, you feel like you accomplished something, I mean, basically. But it's just weirdest thing in this business. We know either, me, it's feast or famine. Either you just hold out for retail or there's nothing. You get no interest. Certain portfolios are certainly that way. And I know mine is, and that is you get either no offers or wholesales lower than you want it to be, eh, almost illiquid, or you just wait around and then you get great prices for that. The one name I sold, this 3 character, I see a lot of 3 characters being sold now on they were on GoDaddy's auctions. Well, by the way, those are ending, even a lot of them today. Have you picked up anything at the GoDaddy auctions, Josh?
Um, yes, yesterday I picked up the Combine.com.
Right. You said that. I was listening. I was walking my dog. What a fucking great name for 1500. The Combine. Of course, and Ish mentioned, I was listening to him. He said, yeah, sell it to the NFL. Well, if they don't want it, but because I don't know how much they buy, but that's exactly what they, bring it, the Combine. And there's a lot of companies that use it, and they always say the Combine. They always put the in front of that. You never hear them go to the Combine, or I guess I just used it there. So what a great, and then I searched it too last night. I was thinking when you said that, I was like searching to see, and then all of a sudden there's several entities, different, anyway, different
Yeah,
places use it.
I couldn't believe that I got it for that price. Actually, it was very very rare that these things happen, in my opinion. And then it's also rare that people agree with you that it's a great deal. Sometimes you think you got a great deal, and everyone's just like, oh, it's okay. But most people seem to agree that that was a good deal. So I'm happy about that one. That's a win.
I think Ish, he's sitting there with that laughy face or whatever he's doing. I think he confused it with concubine. He gets words mixed up all the time, so he probably didn't even put his, the concubine. Hey, Ish, we're going to be talking about something that that I wanted him to chime in on, and believe me, that's risky asking him to chime in. But hey, Ish, so you like the combine, or were you just being nice to Josh?
No, it's a phenomenal name. If you didn't tell me the price, I would have guessed that was a 5-digit name. The Combine the first thing I think of is football. But I can see that being a reality show. It's something media related for sure. But yeah, it's a great pickup for $1,500.
Thanks, man.
Yeah, there's some good there's some I thought some great stuff in there that okay, so when I was talking about the 3 character, well, no one really cares about those. I mean, I know I never run into any domain investors ever. I've never run into any domain investors who like a 3 character unless it's like H2O, unless it really means something because it's like a random 4 letter. They just don't, it's not that they don't get it. Maybe they're just smart and realize, fuck, there's just not enough of an end user demand for it to make them worthwhile. That said, GoDaddy had a bunch of 3 character like FR4, just some bullshit. And they were getting a grand minimal. It looked like that's how maybe one at 800, but that was probably still had 24 hours left. But um, they're weird that even saw that GoDaddy was offering them. I bring it up because the one I sold recently, W1Z, almost sounds like onesie. Well, I was offering it for, geez, a couple $100 through Grit Brokerage. I gave them a bunch of 3 character and said, if you could sell any of these, I think for $4.99, just something. I think it was $4.99. They put out that newsletter, and I just liked the newsletter. I like that idea of. I know they reach out to a lot of domain investors, not end users, some end users, but mostly domain investors. And I like the idea of you don't know what people all around the world are looking for. I gave them a bunch of 3 character, said 499 bucks. That's really what they go for. I wasn't trying to ask a lot. No one wanted any of them. And then soon as that expires with them, about a month later, I sell W1Z for 7,000. And it's just weird and random. But Josh, do you have any 3 character in your portfolio?
Uh, yes, I do. With hyphens, so like l-m.com, for example.
Oh, so that's different, but yeah, I've seen those sell. I mean, I can see companies wanting their 2 letter, especially, and they can't get it. Well, we're
Oh,
gonna jet.
I have
Yeah,
another one as well, but like most of them, they have meaning. Do you know what I mean? Like v v2h. I think v2h.com. Yeah, v2h.com. Like random stuff, I'm not that interested in. If it's got meaning, I do.
yeah.
It's
Well,
like you say, H2O or whatever.
yeah, VH2. That's Van Halen's second record. But what's V2H mean?
It's vehicle to home, which is like it's like an energy term,
Yeah, okay.
charging technology.
Yeah, I got L5D, which looks like LSD. I got a bunch of them, 50 or 60 of them. And you know what? I like, they're the kind that I think they're worth renewing because I know I can sell them if I can sell. I'm going to do the drop catch thing. I love drop catch. So names that I wanted to drop like the other day and I have to come on here and sell them like it's a yard sale. I want to sell through drop catch. I love it. I wanted to ask Zerk. Is Zerk in the room? So is he doing fishing or something? But I wanted to ask Zerk about his experience with selling on drop catch, how long it was to get paid. Do you know anything about that, Josh?
No, I don't. I think Zerk said something about like they have some minimum thresholds. But I can't remember exactly what he said.
I really like the idea. I love the eyes on drop catch, and were different than GoDaddy, meaning you were a private seller on GoDaddy auctions, and it really hurt you terribly. It's not hurting as bad. I'm seeing people selling some 4 letter on drop catch, and they're not getting as good as an expired price, but 20-30% off, not the fucking 80% difference that GoDaddy had. Ish, are you familiar with selling it as a private seller, doing anything selling through drop catch?
No, not at all. That's actually my weakest part of my domain skills is drop catch, and I've never picked up a NameBio drop catch, and it's something I want to learn how to do better.
Yeah, and you can get some great deals. I mean, anyway, people talk about I picked up FRXE for $160, which I like the four letter, and I feel like I'll either I'll hold it and try to get a few thousand for it, or I'll have an opportunity to put it back on drop catch and probably recover my money. Of course, we try to hope the floor moves up a little bit and people like those particular letters. But I like the idea of just that drop catch lets you send them right through their channel. But they got to be at NameBright. And I was going to reach out and say, so I guess I'm going to need to. I got a few names at NameBright. Speaking of NameBright, they were having a pretty good deal on registrations. I don't know if it's still going on, but I like NameBright. I love Dynadot. Josh, you were talking about the $6.99 at Dynadot, and that was the topic that you touched on yesterday. $6.99 at Dynadot, or do you do the $5 at UD and save the $1.99? Now, of course, Dynadot is part of the fast transfer network, and for those listening, you can go to the code to get the $6.99 at Dynadot is OCT, like October, OCTCOM 25. OCTCOM 25 is the coupon code. But so Josh, I think I remember you said, and then Ish, I'd like for you to chime in. You said your preference is to go with Dynadot right now to stay in the fast transfer, but that was only for long-term holds or no, short-term holds and then long-term holds. UD. Or what was your answer to that question? What do you prefer?
Yeah, I'm not actually sure, to be honest. I'm not going to pretend like I have an answer to something that I'm not convinced about myself yet. I I think that I would rather use Unstoppable for 199 saving personally, per name. If I was registering just like a handful of names, 10, 20, 30, I would probably hedge on the side of Dynadot. If I was registering hundreds or thousands, I would probably hedge on the side of Unstoppable.
And Brady did come in the room the other day and he explained that there's really not a penalty. There's only a penalty for people taking advantage of it, meaning you can. I need to get clarification on that. But Ish, which one do you use? I think you use UD, and do you know about those restrictions?
Yeah, I think overall, in my honest opinion, UD has the best value, but the numbers are just lower. So if it's a hand registration conversation, um, it adds up. You know what I mean? The transfers, I think they have some sort of like terms of service that enables them to sort of like, not lose money in case you want to abuse it. And I think that's just fair. But, when I do my renewals and I'm looking at my GoDaddy and it's like $11 for a .com, I'm always thinking, oh shit, I can save half of this, and it adds up when you think about the entire portfolio. The only issue with UD that I'm aware of is they're not currently on the Afternic network, but I know that, and Matt and Brady have both stated this publicly, that in this quarter that should be a non-issue. So very soon they'll be on the Afternic network, and I think that makes them clearly better. So it's just a waiting game. A month or two, I think they should be obviously the better option.
Yeah, and it adds up. Like you said, it's ridiculous. It's half price to GoDaddy, but because have most of my names there, and a lot of us domain investors like to consolidate. Of course, I'm still got Dynadot, NameBright. Who else? I got Spaceship. I mean, I got 30, 40 names at least at each of those places, 50 names. But and I end up in the old days, I would consolidate and send him over to GoDaddy. And I just renewed a bunch at GoDaddy yesterday. How many? 500 names or no, not quite that many. I don't even have that many. I must have only renewed about 75 because it was about $750. Um, so I now I'm wanting to really have my names at NameBright because I want to anything I don't want to keep or I don't, yeah, that I certainly don't want to keep. I want to send them right to drop catch. And I like buying at drop catch, and I think I'm going to like selling at drop catch, but I've never done it. But that's what I want to do. Now, retail, if you want to sell, if you're only selling retail, then that wouldn't interest you. I mean, so then I like Dynadot. But I've got a relationship with GoDaddy. They've always treated me great. I like all the guys there. As a matter of fact, like I said today, I talked to some guy, Chris, I'd never spoken to. He's like, "Yeah, I listened to your bullshit." He didn't say bullshit, but he's like,
Yeah, Chris is my rep. He knows you. He told me I listen to Todd all the time. I was like, you don't get to listen to me on Saturdays because you don't want to think about domains on the weekend because it's a job for him. You
yeah,
know what I mean?
yeah. Well, I'm surprised they get a
No, they do
listen to
listen
something.
to you.
Yeah,
He told me they all listen. They all listen in. He was like, yeah, especially Josh and Todd on Thursday because on the weekends, it's daddy time. So yeah, if you're talking about Chris, that's my rep. Is a great guy. Yeah, they're in there listening on the other listeners probably.
yeah, no, and I gotta say, well, I mean, the listening is GoDaddy's always been my mainstay, and that's where I consolidate to. But look, half price is half price. When we're talking about these prices, and that's like when Josh was saying buying 1,000, buying 1,500, buying 4,000. Well, that you gotta, that's just unbelievable. Why would you do that to yourself? I mean, let's face it, a lot of us, some might have more than others in the bank, but when you're out in the real world and we're all out there, it's a lot of money, 2,000, 3,000, saving 4,000, $5,000. And that you have to, 72% of millionaires clip coupons. Okay. And when I say clip coupons, they might not be cutting stuff out, but they make sure that they get deals, and they want undervalued. They want discounts, and believe it. So it's just like it's getting to be such a big difference that people are opening their eyes to unstoppable domains. I know they're not going to rebrand, but that name is not my favorite name, unstoppable domains. But only because
You'll get used to it. I think
yeah,
Unstoppable sounds better than GoDaddy. Um,
yeah. I
you
mean,
know.
well, I can't say that it sounds better, but the truth is, right?
You just
There's
not
it's
used
not
to
like there's
GoDaddy. If
yeah.
if 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 if, if we're like if we're just to do a poll and ask people for a domain company, would you rather it be called GoDaddy or Unstoppable? Like without knowing what we know, you'll probably be like, "What the hell is GoDaddy?" You know what I mean? It sounds like a stripper club or something. But that's the power of branding. They've built their moat around that brand, and it's worked out quite well for them.
That's why I went there the very first time I knocked on the door. Is this GoDaddy? Yeah, I want in the platinum room, please. Send me back to the back. And then all of a sudden, this guy named Mark started dancing for me. I said, "Whoa, whoa, hotshot! I'm looking for like a Porsche." Okay, so
Yeah,
okay, hey,
Porsche or Mercedes, right?
hey,
But
hey,
Todd, you've had a while past, I can tell. But
no,
no, I think overall, back to domains, the value that Unstoppable Domains um and I'm not a spokesperson for him, in full transparency, I'm an advisor, but I think what Unstoppable Domains is building and the approach is very commendable. And I think that it's fair to say that they need our support because a lot of people complain about, you know, GoDaddy's doing this and GoDaddy's doing that. And here's a company that's like in the trenches with us, listening, implementing what we ask. And, it's very tough to build anything. I'm sure you guys can both attest to that. And I think the support adds up. And this is a company that's losing money to gain market share, which means that we are the benefactors of that initiative. Like we're the ones that are like, benefiting from where they are right now in their roadmap. And, when you think about it, like everyone here has hundreds, if not thousands of names. Even if you transferred your names in, like you save half of your renewals over a year, that's something you can take and go spend on better names on a vacation, put away for other investments. So I think, you know, it's simply a matter of just taking the initiative and breaking old habits. But from what I'm observing and what they're building, give it a few years, they're going to be a force. Like Matt's not a joke, man, and Brady's definitely the bro. He's in the I mean, I think he's DM'd just about everyone in this spaces. I don't know how he does it. I have a call with him later on today. Like he's very diligent, and I think it's commendable. It speaks to their culture and their long-term approach, you know. And I think what they're building is beautiful. They're reinventing the game. Now we have $2 million LTO for 10 years. Like that's if we were waiting on GoDaddy, we probably would have never had LTO. So I think it's beautiful just to watch them, hustling for us.
Yeah, I just got a call from GoDaddy. They said, yeah, they're definitely not gonna be listening to your bullshit on Saturday. Now, if somebody had to come in, they're like, no.
I'm trying to free myself from the pimping, man. They've never supported me, so fuck them.
Hey, hey, I wanted to reach out. Those are my guys. And when there is a GoDaddy code, we're gonna announce it here
What they ever
first.
do for us, huh? For us a
Hey,
bunch of socks?
they've already heard. They know they go like Todd talks out of both sides of his
No, I
mouth.
love my GoDaddy web,
Hey,
though. But hey, I'm a domain investor. I want to save money,
right.
and
Well, I
they
wonder.
care about their shareholders. I care about my portfolio.
Yeah, don't get me on that stock, boy. If all you guys listening to GoDaddy, look around to your coworkers because there's gonna be like 2 or 3 of them gone out of every 10. Because very soon, if this stock keeps fucking doing what it's doing, and believe me, I'll be promoting that. I need this stock to fucking do something. It's unbelievable. hundred and
Did you say?
thirty-two dollars.
Did
I
you say
mean,
stocks? They got socks.
yeah, yeah. Hey, all right. So enough with that. I wanted to ask why Ish you are here. Yesterday, Josh talked about it, but Elliot posted about it, and that was about. So Elliot posts fractionalization, and I know we fucking beat this thing. He's like, that's like a a problem waiting, to fuck with something that's basically already working. Why fractionalization? He wouldn't want to do it. Basically, he made the comments that all it is it's causing a problem to something that doesn't need to be, created. I don't know how he put it, but
Yeah,
we know
I'll
the
say
gist of
this.
it.
He thought
Yeah.
he wrote exactly what I was thinking before, and I'm glad he said it. I'm not trying to ruffle anyone's feathers, but as soon as I saw that post, I was like, I messaged a group of my friends. I was like, this is the most ironic post I've seen in a while. The guy's talking about solving problems that basically aren't problems, and, and that's
Josh,
like,
I thought it sounded exactly like you. That's how I felt it too. And then Fred, of course, chimes in, and I wanted to bring that up. Fred at D3 chimes in and says, well, first of all, he says, do you have a mortgage? And he wants to do some analogy. And of course, Elliot's not having it. Like, I'm just fucking, I don't even know what you're talking about. But Fred was basically saying, would you take loans against it? And Ish, that's what we talked about. So they sort of shift gears. Maybe you don't want to buy a piece of a domain through fractionalization, but you'll certainly like to be able to use it as collateral. So it's like they're showing there's several different ways to take advantages of tokenization via fractionalization. So Fred sort of was trying to make that argument, but so how do you guys feel about that? You might not want to buy shares, but what do you think about using domains as collateral and getting loans against them? Is there something there?
I
well,
mean,
we
go
know
ahead,
how
Josh.
Ish feels about this. Go on, Ish.
Well, I mean, I've been very clear about it. I think when you're building anything, you want to solve a problem, not create a solution to a problem that doesn't exist. I think that's what Elliot kind of like said. And it's funny because I've benefited from tokenization of digital assets, like with NFTs or whatever. And I'm very much aware of what the possibilities are. Even with Web3, like there are a couple of platforms that allow people to borrow money against their .eth names, and it was done on chain. Like I get the opportunity, but this push towards fractionalization is somewhat short-sighted because there's an assumption that people want to own a stake in names, and I think that has been that's sort of like you're forcing a narrative that you haven't tested, and I don't know, maybe I'm saying this more as a cautionary tale to them. Like, look, this thing has you're using the wrong functionality. Like what people, in my opinion, want, and I haven't done any survey either, so I stand corrected, is not to own a piece of a name because, oh, this sounds cool. what people want is an opportunity to make money. They want to unlock liquidity, right? So if you're selling me um, ownership of a name, there's so many factors for me to assess if that's a great opportunity, right? If you're selling me an opportunity to own a name at a wholesale price, that's a different proposition from me being the an owner or shareholder at a retail price point, right? You know, we all want to take that $10 or hand register names and sell them at 5 grand, 10 grand, 100 grand. That's the dream. I don't want to be the guy on the on the buying side, even if it's at a fraction of the retail price. But if you're giving me an opportunity and saying that you can build something that allows me to, unlock liquidity with my assets, right? Then I'm more interested in that. So I'm hearing all this, oh, we're going to do fractionalization, but I'm not hearing anything about using domains as collateral. So that's why I'm just basically like making some noise about it. Like, hey, this is not what we want. We want the dessert. We don't want the tasteless, main course. Give us the dessert. you know, I guess that's the best way to explain it. But they're pushing fractionalization, and I'm not hearing anything about peer-to-peer marketplace where people can borrow money against domains as collateral.
Josh, do you think? I mean, first, I think they're just trying to explain to people as much as it's going to be difficult. As you bring up, we don't know how people don't know how plumbing works in their house, but yet and you don't even question. So they're trying to explain. Here's tokenization, and then here's fractionalization after we tokenize, and people are already like they don't. So I think the people that are involved in this, from D3, Domora, and so on, are trying to give people a little explanation on what it is so they don't feel like you're really wading, in waters that you have no idea what's in there. So they're trying to explain it, and that's already the hardest part. That's why they talk about fractionalization. The easiest way to explain it is to say you can buy a share of a domain name, and you're right, there's just no interest. Now, you said at wholesale there is interest. So I'm always thinking, Josh, when people come to you and go, hey, I'm thinking about doing this myself, hey, I have this name, I know I know there's a wide range. The wholesale price may be $1,500, why I think my retail price is 50,000. When someone brings you a name for 1,500 and you think, you know what, that is a good price, a good wholesale price, 1,500. So like the combine, you bought it for 1,500. Instead of buying it yourself, that's like you saying to others, hey, who wants 10% of this at 1,500? I have an opportunity to buy this at 1,500. Who would like to go in with me? Well, usually, why would you want to do that? Well, maybe it's like what mutual fund managers do. Just because they think it's a value, they don't just buy it just for themselves. They're doing it because that's their job, to manage a fund and to bring people in at those great prices. So would that make sense to you? Buying, like, is it buying a fraction of wholesale, or at least, um, I don't know. I mean, it does make sense, but is there going to be somebody that's willing to do that? Like, would you be willing to do that? Bring people in on a name you can buy at wholesale.
No.
So that's N-O, N-O. But
I
I
I I
understand.
know I want to go into more detail on this, but I think that over the last year or so, I think I've been pretty clear on my position in this regard, and that is that
Yeah, yeah,
domains are attractive for, very specific reasons. And as soon as you start fractionalizing them, even at wholesale, they become less attractive. Um, and yeah, again, I don't think that the demand is there. And I don't think that there's any obvious indication that the market wants this.
yeah. Well, I'm with you, and we've roasted this thing every different which way. Hey, Dave, thanks for being here. What are your comments about this?
Hi, Todd. Good morning. Yeah, listening in, I think that personally, my reservations with the idea of tokenizing and fractionalizing the domains is that a domain, in my opinion, really doesn't have value unless two things occur. One, a domain is developed and generates revenue, or two, a domain is sold. Other than that, a domain, in my opinion, is more like inventory, and it really doesn't have value, monetary value, that is, until it's generating or selling. So that was just my take on that, and I think that's where I wonder where the value would be in doing something like tokenizing. Now, as far as partnerships buying domains together that maybe one party may have access to or align on, I think certainly that could, work in small scenarios.
Yeah, the values to the marketplaces, they're assuming that people will want this and there'll be a lot of transactions and they'll make transaction fees. And I get the innovation, but like I said, I from the domainers that I speak with, I put up a post about this, and some of the very best domainers agree with me. So it's not a lot of people that even understand this or are asking for this, but the people in this space that are showing up every day and fully invested in domains haven't asked for it. So what are we solving?
Yeah, I think there's a lot of people. Josh isn't the only one that say can pick names. I bring that up because I think, and what if we said, hey, we're going to give someone like Josh $5 million, we're going to pay him handsomely to do his work, not do it for free. But here's $5 million. Go buy names like the Combine for 1,500 when you can. Check, search expireddomains.net like you do. Use tools. We want to give you some money, not just to buy, but some money to enhance your tools, to improve your tools, and for you to really spend some time doing this. What is it? Some managers are going to want a lot more than is worth, meaning if Josh says, okay, well, I want 1 million of that as my fee and I'll take the other 4 million to, well, that may be a little steep, but the point is you're really looking for a team of people that have proven track records. This is one uh, strategy, one method, because there's other ways that I prefer that are like, I'd rather just already have the names already purchased and already being monetized. Okay, so it's a whole different, it's like income. uh, I don't know why Mark Becker was calling me right then. uh, that's my rep over at GoDaddy. I may have a call back, I guess, but
The
so
challenge
yeah,
is
go ahead.
the challenge with
Yeah.
that is that anyone who you con who you who like the group or the people providing the funding would confidently put their money into, uh the issue is that that person would rather just do it themselves and for themselves.
Well, John, just hold on. That's like, but there's a lot of guys, and that's why I go outside of the business, meaning existing customers of mine, clients that are invested in stocks, real estate, and so on. No domains at all. So they're like, is there anything still there in the domain space to invest in? Basically, it's like guys who don't want to trade stocks. They want to give their money to a money manager. Okay, you're the money manager, you handle this. So you're the domain investment manager, you handle this. So really, once you say, okay, there is a guy over here says he knows nothing about names, he does have an extra couple 100,000 that he would like to put towards it if everything is set up properly and he believes in the managers of it. So I think there are people that want to invest that know nothing about it. Listen, domain investors, us domainers, we don't, like, I heard Darcy saying in the room the other day, yeah, they don't want to pay $30 a month for a fucking tool. Okay. Domain investors are not, I hate to say it, you go to the events, they're not somebody you want to cater to. So that's why we're thinking, is the domain space big enough to where there's interest outside of who's in this space. So now, is it finally a real world asset? That's what all the big timers are talking about, running the companies. And Fred talks about it at D3. We're trying to get this thing, recognized, domains recognized. And Drew talks about it all the time, recognized as true assets outside the domain space. We could fuck up a free lunch, the domain investors. We don't, half of them, 97 out of 100 don't make any money. Who wants to listen to them, frankly? But the point is, is there promise enough in the industry? And we realize, well, there's enough promise to where people want to invest in Namecheap. You see private equity going, we believe there's enough activity, enough profit, enough revenue to invest in some of the vendors, some registrars. There's people that believe parking's worth it. There's people that gave money to Unstoppable and gave money to D3. There's people that believe there's something there. So now we really need to, but what they can't do, and that's why I'm like, listen, I know guys that are willing to invest in vehicles outside of stocks and real estate. Okay, they'll invest in a fucking car wash. I got guys that'll invest in it, but domains hasn't turned the corner yet. And I'm talking about domain investing. There's guys that say, well, I already own stock in some of these, in VeriSign. I own stock in things related to that industry, but not they don't own domain names, and we're trying to make that leap. Is there something there? Even and if we can get them great stuff at wholesale prices, still the hard part is this: it's my job, the salesman, who can really find the investors and then get them to invest in domain names, if it's not individually as a fund. And it's like, well, fuck, what am I going to do? Both find the money and create the fund? I mean, these guys, no one can, now these guys trying to create, these platforms tokenizing, that's really not even helping. That's not making it easier for me when I'm talking to guys with, a lot of money to say, hey, great news. It's tokenized but anyway, so that's why, is there
Yeah,
anything there?
I think that companies with funding in this area are wasting time, money, energy on things that are not that important compared to other things that I think are more important, like educating and marketing around end users in terms of like what's available, discoverability. Um, I think that just those two things in itself are incredibly more important and impactful than trying to bring in, uh, you know, trying to bring in institutional investors. It's just, I don't know,
And
doesn't make
I
sense.
don't think the target is or are institutional investors. I think the target, from what I'm looking at, if you guys want to get a vibe of what D3 specifically is building, go to mizu.xyz. You can actually see the test net, right, of what they're building. There's a software.ai. They create a token for it. You can for it. You can you connect it to your wallet. It's just like trading a meme coin. They're using the domains. They're creating a market value for the domains, and
Yeah,
this is
it's fun.
targeting Web3 people. And I'm telling you, the Web3 people are going to more than likely reject this. But again, I'm rooting for them. I want to be wrong so bad, because if this works out, and kudos to them for taking the initiative, then it could open up a floodgate of you know new domain investors. Right? What they're doing is taking the domain and saying this is an asset that we can extract value from by selling it. But people have done this with meme coins and all type of other stuff. So we'll see how it works out. But
So
I just don't.
I don't think they fully know like what they want though. In that case, because an advisor for D3 uh reached out to me and Josh specifically because they wanted names that people would consider fractionalizing, and we asked a bunch of questions and basically said like, why would we do this? Why does this make sense for us to do this when we don't need the cash? We just we're happy to wait for a retail price. Long story short, the conclusion was that they said, well, you can get your retail price, and we said, well, who's going to pay for that? who's paying that price? Like, why is this? Like, why does this make sense for anyone to put their money into? And the answer was institutional investors, word for word. And I have the text message right in front of me, and I'm like, I don't know. I don't know. Like you said, I don't think that makes any sense.
Hey, Josh, I don't mean to ask, but I got my rep called me and I just missed 30 seconds. So what was that text you got about institutional investors? Then we'll go to Ragu and essential domains. What did you hear?
Just that they were looking for names to put on to fractionalize, and we were wondering why that was why that would be advantageous to us. We don't need the money, we want to sell it retail, and essentially, long story short, their answer was institutional investors, and we'll pay you, your retail price. And it's like, what? How does that make any sense?
Okay, yeah. I mean, I got you. I know we're going to start seeing them get aggressive. I'm talking about all places that want to tokenize. We got this platform, we want to tokenize, and they're going to want to start tokenizing somebody. There's going to have a good name so they can go out and market and say, hey, look,
But
we got something.
the problem is,
Yeah.
like, let's say, okay, best case scenario, they fractionalize a great domain. Someone like a Braden, I don't know, sells one of his names, exam.com, for 3 million, right? And it sells out to all these institutional investors. Do you think they're going to be happy with what comes next? You think that they're going to have a good experience?
No. And the thing is, well,
I'm
I'm
just
wondering
laughing
is,
at 3 million
yeah.
at institutional investors in the same
Well,
statement.
no, no,
It's
no.
just
The truth is, Josh, you're right on. That's like what they're going to say. I want to know who, in my position, like as a registered investment advisor, who's telling them, come in, you're going to buy this, and what are they promising them? 15% return. But what are they saying? Really, the conversation of, okay, and then really, how is it going down on what platform? But there's a lot of serious stuff going there when you're talking to institutional investors, whether they're, like I said, or just big accredited investors, and you're saying, yeah, you're going to be buying this at this value. You're just pulling the wool over their eyes if you're, telling them it's a good value, especially if they're buying. Now, if Braden comes in and says, I'm going to give up half of the name exam.com for say a $300,000 valuation because he feels like that's as low as I'm going to go. So I'll give up a half of it for 150,000, and then you can let whoever you want to feast on the 50% for 150,000.
Yeah, but he's never gonna. But
Then
my point is, he's never gonna do that, right?
right, yeah, he's not going to do that. That's why what they would need to do is
But
find somebody that's really desperate.
everyone that owns that caliber name is never gonna do that.
And well, they're going to learn. They're going to see it firsthand. They believe that we're going to find some people that will do this, and we're just sitting here watching it. And I agree with you.
They
Yeah,
believe it's the crowd that was buying NFCs that's going to do this, and this is obvious when you look at the test net. They want you to connect your MetaMask wallet and buy tokens of a domain, but the issue is the valuation is going to be the problem. You know,
we have a lot of good friends here. Ragu is going to go, and then essential domains, then Arif, and I got somebody else coming up. But Ragu, please be on point and brief. But I'm glad to see you here.
Thank you, and good afternoon, everyone. And I'm going to make a few points, and then I know my talk is a little bit to the point. It's not that great, but I'll try my best. So, starting off with this conversation, which is, very interesting conversation and good ideas, no issue. So, starting with the David, which he said two things. Okay, the domain is sold, that has a value. So we know, or its domain is built or making money. Yeah, people will do it. So I agree with David from right there and then. Then let's go further. In my example, and I'm talking about myself, I have access to the investors. I have access to close investors, means I have no hesitate to say that. My son is willing to give me money or invest it in this business. Now, the dilemma is when he questions about domaining, I believe he's still understanding how the domaining word and how domaining works. So I'm not approved yet. He's expert or anything. He's just got into this. So then the question comes in, okay, Dad, this is not good. No, 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 don't buy anymore. Don't buy .ai domain names. Doesn't make sense. It's only temporarily. So you get this kind of things from the investor, and we are treating each other, he's an investor. So then if the investor, it is not qualified according to domaining business or understanding domains, and it doesn't come overnight, just buying a few names and you think you're a domainer now. It takes a long time, as we all know. So therefore, if you go that route of when people are investing without knowledge of domaining, then you have a dilemma is they have to believe in you. And therefore, as Todd was saying, domain manager who is doing this thing, and is a perfect example, track record, like Andrew Rosen did this with MJ.com. And we can trust him, we can see his track record, he will make a good decisions. We don't have to say it, and we are the investors, and it works out very well. So if that is the case, and that's the only case, if that is it, then this thing works, what we're trying to do here or figuring out. Other side, if the investor is smart too, suppose another, like you ask Andrew Rosen to invest money in your project, and let's see what his opinion is. Right now, he wants to put his 2 cents in, and then what happens? What the domain manager do? Listening to all the investors, taking votes, and then deciding, okay, this name MJ going to be selling for $2 million or not, and making our money. So that's another dilemma. It is, how do you handle and how do you decide once the investor is a knowledge of domainers, and manager is a knowledgeable. So that's more like a legally or contract or decision making ideas, where how do you implement that? And the last thing is, doing all that idea, as Biden saying, okay, I want to make $3 million, and I'm not letting it valuation for $300,000, and then everybody split the money. I did the already hard work. So how do you decide the actual value? Even though he's not going to sell it for, he's not going to agree with the $300,000 and wait till $3 million idea. So try to. I think you got my point. So think about it: is how do you ask for money? And if it's
Raghu,
yeah.
sorry. You said a lot there. I want to let the others have a chance to speak, but Raghu, you touched on it. Everything needs to be spelled out in a situation like this. Is the manager have full control of the decisions with regards to selling? Is it a full democracy with regards to, does everybody that you own a certain number of shares, so you have a certain number of votes? Everything needs to be spelled out specifically, and then after you have this agreement, how things are spelled out, then you're going to have questions about, okay, you think you guys have answered all the questions here, but now I have even more, because you're saying it is a true democracy, we all have rights to vote. How does this go down? So you brought up a lot of good points, but when you get involved in fractionalization, owning a piece of a name, you need to know specifically, everything needs to be spelled out on what your rights are, what say you have, and so on. Let me go to essential domains, and then we'll go to Arif and then eCorp. So essential domains, what comment do you have? Okay, well, you can step in after Arif, I guess. Arif, what comments do you have?
Oh, one more point. Sorry, just one more point. So this new company, Doma or someone, and they are very aggressive, or you can say excited
Todd,
about
I'm
this.
here.
Is excited
Todd,
about this game, but I'd like to know their background. They're just a new idea. They're implementing it, great, and they are on it, great. But if someone offers,
Regular, they're
we need to
experienced
see their.
domainers.
We need to
They're
see their.
experienced
Todd,
domainers. You
Todd,
can look up their
essential.
background.
Yeah, that's free name with page in them, but still, even with experience, right? They're going to need to do spaces, or they're going to have meetings. They're going to be able to. They need to market and make it public and get people familiar. We're not just going to jump into anything, and a lot of us want to see other people wade into the shark infested waters before we even get near there. We're up here drinking a Mai Tai. All
Hi,
right,
Todd.
go ahead.
Essential is with
Yeah,
you if you're up
yeah,
for us.
yeah. Go ahead, Essential. You're up.
Oh, okay, great, Todd. And Terry Kettle, I know you like personal people, not necessarily corporations. I'd like to lob in that we all refer to domains as digital real estate. So the movie's been played out before by real estate. And I think domains, they have the opportunity with the vast asset base to clearly go the same route of leverage, fractionalization, and we're seeing, with the LTO coming into the market, it's accelerated our ability to sell significantly, and we're also seeing institutions come in. We know that on my personal financials and corporate, the banks, JP Morgan, are accepting digital assets as leverageable assets, recognizing value. And, as we prepare for Miami, we're in touch with institutional investors, Citadel and other players. So we just need to go the way of real estate, and every which manner that real estate's been leveraged, sold. I mean, I can buy real estate in Las Vegas, Los Angeles, New York, Miami, and I think domains should go the same way and follow every possible step to provide liquidity and increased value.
Well, Terry, thanks for joining us. That's the dream. But yeah, you go into a bank now and say, I have this great single word domain name. I want to get a loan against it. They're saying, yeah, with property, we'll do that for you. We'll
No,
give you
we get leverage personally, and we get leverage corporately.
Well,
And
but you're
in the
talking about
majors,
privately. You're
no,
still, well, you're going to go to, if it's JP Morgan, they're not doing it publicly. They're not. I'm not saying, if you have a private banker and you can say, here's some assets that aren't traditional assets, they're digital assets. I mean, they're going to want to know
well,
all sorts of stuff. So no, I mean,
we're seeing internally that they have analysts now internally that will give value to these assets. They have to. They have no choice because there is enough money, and these domains are digital assets that are substantial and not just isolated. They're
we're
the
gonna
vast value.
Terry, we're going to stay on this topic. Stay with us on stage because I know Josh is chomping at the bit, wanting to say something about that. But let me go to Arif, then we'll go to
My
Chad
head's about to
because
pop off.
go ahead, Arif.
This whole thing is friggin' bonkers. You can't compare real estate to domains because real estate is liquid at almost a full retail price. Domains, it's at the wholesale price. What Josh has been saying is exactly what I've been saying forever now, right? Like, yeah, okay, we can get all these blockchain people who invested in NFTs and some certain crypto things without fully understanding them. At first, there will be an influx, right? If Josh can sell, or if Braden can sell, let's say, a domain that's really liquid wholesale at 300,000, if he could get 400,000 for that, then yeah, overall his portfolio kind of makes sense. But then, as Josh says, at a certain point, the investors are going to go, oh wait, the return's not what it's supposed to be, and that's when everything's going to burn off, like with NFTs, right? At a certain point, the real demand is the end users buying at retail prices, right? But that's not a liquid thing, right? We sell a small percentage of our domains every year, and that's where the compensation or the value is skewed, because it's not. You will never. Anybody who invests at a domain at full retail, thinking it's a wise investment, is going to lose their shirts. The fact that he got this text from a company, D3, which has apparently raised millions upon millions of dollars, just shows how bonkers it all is. They don't even understand it themselves if they're thinking that. If they think they're going to get investors coming in and be happy long term for buying domains at retail prices, it's bonkers how much they just don't understand the market. And that's the problem. Oftentimes these things happen, right? We have things that come and go, right? A lot of companies come in, get lots of investment from people who think it's the next big thing, but ends up not being. And everyone loses money, right? And we go, well, the people wouldn't invest millions of dollars if it was really a fake, whatever it is. But it's not fake. It's just that they don't understand. Anyways, I could go on forever, but that's like, it's just what I've been saying for the last forever now.
I think a D3 space, Fred can take it, but these, this needs to be brought up with this type of passion because, what you're saying, there's a lot of truth to it. Chad, I know you have a ton of thoughts on this. What comments do you have about this issue?
I don't know. I almost wanted to kick it down the can. I think his investors do understand narratives. And the narrative is if you have trillions of dollars in crypto, why don't you have billions of dollars in a historical digital asset? And can we unlock some of that? So that's their mission and vision. They don't give a shit about small time domainers, whatever. But I agree with Reef, but just hockey has to go from 5 million to 50 million to get an ROI. And until you can start proving those mechanisms, you will be disappointed. But then once you can start proving those mechanisms, then everybody floods in, and that's what they're hoping. And so the tokenization of the asset gives you that utility and that leverage when you can programmatically put that on a digital asset like a domain. That's the purpose of why you tokenize it, not to fractionalize and all the other bullshit. Now, on the other side of it is everything needs to have accountability and responsibility. And so if nobody has the accountability, like in a domain fund or whatever else, or the responsibility, then you have just people throwing shit on the wall and nothing goes anywhere. But when your back's against the wall and you have that, that's where we need to see more of. And I appreciate people taking risks because I know that they're accountable for executing that plan. And if it works out, I want to support them. But we as an industry, and as everybody mentioned with Rosner and everybody else, I didn't make any money on MJ.com. I still don't know what happened to my shares of that company. And so, do I have them? I don't even know if I fucking still got them, but I put $5,000. Um, and so, but I understand the rising tides will raise all boats, and we're trying to get our industry as a whole recognized into the institutional investors as a asset class that is underutilized where you can make a lot of money. I'm
Yeah,
done.
And
go ahead.
I just want to say hockey goes from 5 million to 50 million because of the end user's usage of it, right? They have a business plan for it. They exploit the domain for a business plan that makes significant revenue that they're going to pay a small percentage for the domain for, and the rest is a business plan. And yes, it could be worth 50 million to somebody, right? But it's not worth 50 million to a passive investor, right? Unless you're going to build it out, but then we're talking a completely different story, right? And I don't want to go down a rabbit hole because like it's a totally different kind of investment if you're investing in building out domains, right? It's not domain flipping. So it's just like that. That's the whole thing. The point people don't realize is that the ultimate value of a domain, why it goes to retail price, is because there's a end user buyer who comes in with a business plan to exploit the domain and maximize the value, and it's that business plan that enhances the value to them. Right? To me, it's not worth that much if I just hold it in my portfolio. But for at a long term, it is because I sell a certain percentage, a small percentage of my domains at a certain multiple, and I buy them low enough that I make money as a flipper longer term, right? But that's where it is. It's not worth the same price to the end user price, right? Otherwise, I'd keep all my domains. Like what's the point of selling your domains at retail if they really are worth retail to the investor? It just doesn't make any sense.
All of us here definitely want the same thing. We want the domain values to increase. We want domains to be considered real world assets. We want to be able to get loans at the bank on them real easy. So Josh, what's your response to Terry, who is very positive, saying these are already real world assets, these digital assets, we can use them as leverage. And I'm not, if he has firsthand experience using them as leverage, and some people are getting loans through domain capital, maybe you can get, a big place like JP Morgan to say, you know what, we're going to give you this loan because we do recognize these other assets. But Josh, what's your response to domains, being equivalent to real estate?
Yeah, I mean, like, listen, is there are similarities, but it's not equivalent. In terms of these being real world assets, I mean, it's a bit of a stretch, but I do think that there will be opportunities to collateralize domains in a simpler way than you can today. I mean, this has been happening for years. People are able to take out loans against their domain names. Nothing is new in that regard. I think that the ability to make that easier will happen, and I think that it does make sense. It's like if someone comes to me and says, I've got this great oneword.com, and I think that it's liquid for 150K. Will I loan them 100,000? Yeah, I will. At whatever 12%, I don't really care. You know, if I've got 100,000 and I can get 12% on it, and with the possibility of getting a domain back that I know is worth 150K, I'll do that. But also, I'm a professional domain investor. The guys over at the guy underwriting your loan at JP Morgan wouldn't have the foggiest clue of what's going on and how much a domain is worth. And that's one of the things that I've brought up on these um, on this topic so many times in the past, and is that unfortunately most people are not qualified and never will be qualified to provide an accurate value on a domain. And just for what it's worth, most of us can't even agree on what the right value of a domain is, right? If someone comes to me and goes, "Oh, this is worth, you know, $1 million." No, it's not. The only price that it's like these domains are worth is what I'm willing to pay for them, and other people like me are willing to pay for them in the everyday market, right? So, the very best names like um, something like eclipse.com, right? Is that might be liquid for 350, 400K. Um, but most names, 99.9999999% are not liquid for anywhere near that, right? Um, and most people are not really in tune with the market enough to be able to assign an accurate value on most of these domain names. So no, there will never be a JP Morgan or an institutional type investor or banking that is able to collateralize domain names.
So I agree with what Josh said 100%, but I have a question for you, Josh. Flip it around. Let's say you had a domain asset that you think is at wholesale $150,000 that you bought, right? And you think you paid a fair price for it. What price would you want to or need to it be evaluated at for you to give shares at? Is it like 200,000, 250,000, or is there no amount at all? Or
I'd have no interest in giving shares in any of my domains. If I needed money, or I could use money in order to leverage my assets to buy more assets, I might consider that. Um, but I wouldn't do it through selling shares of my names. I would
yeah, no, I
prefer.
figured I kind of knew the answer. I just asked it like devil's advocate a little bit to see, just to show that
Well,
it's
I
not
want
as simple
Essential
as it.
Domains to have a chance to respond here. But Arif, that's exactly it. If Josh was like, "Hey, shit went south. I got all these names," and this is a lot of people's portfolios. Some people have just big portfolios. They need money and they have crap. Now, if you were lucky enough to have some great domain names and you're broke and you need money. You need money. Okay. So we're talking about somebody who needs money and you have good names. That's when things would meet up and make sense. Now you're willing to sell off. We heard a guy who was like needing some dough for his name, techno.com, or he not needing, he was just needing money. And then he happened to own that name. So he thought, you know what? It's one of my assets. I don't have a fucking car that's worth anything. This is what I have. I spent 350,000 for it.
Yeah,
Would
I have
somebody?
a few thoughts on that, by the way. But
Yeah.
I
Well,
mean,
hold on, Josh. Let Essential Domains respond to what you said before, because I want to know, does he have specifics about financial institutions or banks? You know, how are they valuing these names, and what's the firsthand experience he can share with us?
Okay, great. Well, we're in an echo chamber, and we're primarily English speaking, and we are just a grain of sand in the world. And just in direct, I have a GoDaddy rep. He let it drop that he has 7,000 clients worldwide. There's a lot going on throughout the world, and that's why I think there is interest from I know there's interest from the banks. I think they have ways to value if you have a significant enough assets that they want to bank you. But the leverage on a traditional institution or bank is only going to be around 10, 12, 15%. So, if you're holding a portfolio of 5, 10, 15 million, that's not much leverage, but they do give recognition to it. I think that the sell-through rate of 1% is bullshit. That the reason we have such a low sell-through rate is because, like real estate, there's a lot of real estate in the world. Most of it is worthless. Antarctica is not too much value. It's the good real estate and the prime real estate that generates sales. The sell-through rates, we need to filter out all the crap and the bullshit and really get focused on the good domains and the prime domains and the premium domains. And when you isolate that down, and the problem with the sell-through rate has been the liquidity, the depth of the market that's visible. And I think by opening up the leverage that real estate has and the way it's been syndicated through private placements, through public placements, it's going to make us all the boats float higher. I think we need to go there. I think Miami is going to be a great representation, NamesCon, because I don't know the count on the delegates now, but I expect there's got to be 50 countries represented, and the banks, institutionals, private investors, money, I think will be there. And Miami is going to be on fire that whole week. So get your hotel room. But that's my 2 cents.
Well, thanks, Terry. But what's frustrating for me, and I'm sure a lot of listeners, hold on, is yeah. So my portfolio is worth 10 million. I said it is. I think it is. I fucking believe it is. A good friend of mine. Okay, it's my mom. She said it is. So I go to J.P. Morgan, and they're going to go, no. First of all, right? Everybody's valuing differently. So you say if you got a 10 or 15 million dollar portfolio, who says? And
Well, no, they want your financials. You
well,
have to
the
put
fuck
them up.
financials. We're talking about just, I don't have any financials. All I have is
Well,
a domain portfolio.
well, you need financials. I
Okay, so
mean,
well, then they're
if you're a
evaluating
fund,
something else.
offer up a balance sheet that's 0, but you're going to have capitalization come in. But no, you have to put up a financial and put it right on your personal financial. I've got a domain portfolio of 10 million, and it's a large percentage of my net worth. If the bank wants to bank you and they need the business, they will recognize it, and they are developing internal resources to put value
the
on
bank,
these assets.
the banks don't need to lend against assets that they have no idea about.
Yeah.
If you put on your personal financial statement that you have a net worth of 20 million and 18 million of that is your domain portfolio,
Uh,
they're gonna laugh. They're
okay,
gonna laugh you out the bank.
then let's take that off the table. Let's address the crappy sell-through rate of 1%. Will
But
it? Can we, if we focus on good domains, premium domains,
I
will
have
we
to
get?
reply to this. I have to reply to this because look, my sell-through rate is actually less than 1% a year, and for the last 5 years, I've been doubling my money. This year might be even a little bit more than that, right? So like it's totally fine to have us. That's the whole point, right? Is that
No,
they're not liquid anywhere near to what they
no,
are at retail prices,
no.
right?
No,
Some you can argue that yes, there's as Josh said, the 0.00001% domains out there. Yeah, it's a different conversation maybe when you're talking domains that are wholesale in the six figures.
Look, we all need to get off this 1%. If we get more liquidity on the buy side, get more
But
LTOs.
here's the thing: I don't need more liquidity. I don't need more liquidity.
I'm trading at a much higher sell-through rate, and it's because I'm in, I think, good domains.
Of course, yeah,
And premium.
that's what it should be. Sell-through rate is not the ultimate result. It's your sell-through rate times your multiples, right? What your sales are.
Okay, you guys are professional domainers. I'm very interested in the space. The problem with the 1% sell-through rate is on the buy side. There needs to be this LTO for 10 years. Terrific. I posted it. We should be financing this like cars, recognizing LTO sales, and let's get rolling. Like it needs to be much more liquid, and I think it'll push up the sell-through rate.
But how you can get liquidity from this kind of asset?
I think what's being offered now on 10 years is a way to go. I think they need to be financed like cars to make cars move. 7-year loans, interest rate buy downs, every which way you can imagine. But the 1% sell-through rate's bullshit, and the problem's primarily on the buy side because I'm thinking in this room we have good portfolios.
Yeah, lots been said here today. Let's go to Josh real fast. Josh Lim just joined us. Do you have a comment when we're talking about Josh?
Yeah, I do. Am I on? Can you hear me?
Live as can be, yes.
All right. Okay. This is really good timing because I don't know how many of you are active on Reddit/domains. There was a discussion on domain name backed loans, like, domain backed loans in the sense that you have a portfolio, and then basically if you don't want to sell your names for cheap, or you don't want to like wholesale them, what you can do then is get a loan at 10 to 20% of the not the retail rate, but an agreed rate or something like that. So I'm just wondering, what you guys think are nice numbers? Because for this to work, the interest rate has to be like 20 to 40%. I mean, because it's a not entirely as a liquid asset, but it's still a liquid asset. So I'm wondering, especially those of you with large portfolios, right? Like maybe you have like a couple of thousand names, and there's one day when you need to renew like maybe 200 of them. Maybe you went on a spree that day. So I think it works very well for people like that. What are your thoughts?
Josh, okay, domain loan's really simple. The person that's giving the loan is going to decide the value, not the person that's coming in. So just like Domain Capital does, you bring them a name, they're like, okay, techno.com, we'll loan you. They loaned the guy 100,000. Okay, they must have thought that's what they'd be willing to buy the name for. Talk with Greg over there. I mean, at NamesCon, he probably says, thinking, why are you going to share everything? But they're only going to loan what they'd be willing to buy that name for. So always the person loaning the money is going to say, okay, what'd you bring me? Okay, this is all bullshit. All these names that you have that you want to renew, they're not worth anything. That's what he'd probably say. Now, if those were like 10 3-letter.coms and you can't come up with the fucking $100 to renew them, I'm sure he's going to say, well, I'll loan you the money. Yeah. If you got some great names and they're well worth it. So basically the person that's loaning the money is going to say, here's what I'm willing to loan you. They're in charge of it. And usually they're willing to loan you, from what I understand, what they would buy the name for. So they're like, I'm going to buy the name from you I'd buy it for 100,000, so I'll loan you the 100,000, but you're going to pay me 15% interest, paid back in 24 months. Congratulations, here's your money. The domain's in my account now. If you need the servers changed or you need me to point it to fucking your LinkedIn page, you retard, I'll fucking do whatever you want. But it's the person that's loaning the money decides on the value. So sure, if you have single word names, if you have some 2-letter, 3-letter, those are the ones that I would say, yes, you'll probably qualify to get a loan on them. It still could be very low. A 3-letter, they might give you $2,000, $5,000. 10,000 is probably wholesale for, the low end of the 3-letter, what they would loan you, but you'd have to ask them. But still, it's real simple. So they're actually Domain Capital. We have to bring them up because they've been doing it for years, and they'll give you a 15% or 20% interest rate on a loan. And they'll, like I said, they're the ones that decide the value of your name. And, that's how it's always going to be, the person loaning the money. I don't know if anybody else wants to talk about this. We've,
Yeah,
hammered it.
I don't think that those numbers make sense for somebody who's a successful domain investor. However, like if your house catches fire, or like you're in a situation like I am, where you have like 3 family members you're dealing with the health issues and whatever it is, and you don't really have time for domains anymore. That's where, okay, yeah, there might be these exceptions where it makes a little bit of sense, right? You need to cash out for some unexpected reason, but otherwise, I just don't see how the lender and the lendee, or whatever you want to call it, are going to come close to seeing a value that makes sense to both of them, like a win-win for both of them, right?
Okay, as an example, right? As an example, Epic used to have a domain name liquidity marketplace. But it was
Yeah.
full of people that only posted their portfolio or their whole portfolio even, but not enough lenders. So this time we're doing it differently, like me and 2 others. I mean, we were planning this, basically. The most important part is at least one person that's willing to fund domains. Like if let's say it's, and there needs to be more people, like
But
jsh.com would be worth a lot more to Josh and me than Ish, for example, right? Ish might want ish.com,
so like again, you're not wrong in that if there's a volume of lenders, it might make a little bit of a difference. But the problem with Epic, why it didn't work, was because the lender and the lendees didn't see eye to eye. What the lender was willing to give was usually a fraction of what the people coming in for money thought their domains was worth, right? And that's where the difficulty is in this, right? It's not like real estate. Real estate, it's a completely different thing because people are willing to invest at near retail prices, because that's the gap between wholesale and retail. People flipping houses is very narrow compared to domains. With domains, we're talking multiples of the wholesale value. Whereas in real estate, we're talking maybe 20%. If you're getting a really super rundown place, maybe you make 40% on it, but you have to invest 20% more, right? So really, you had that initial 60% and then another 20. That delta is very narrow, and so yes, you can come to agreements on what to loan for, and even then, it's not the full amount, right? Even the full.
Arif, hold on, Josh. Hold on, Arif. Hold on. Let's just slow down here. First of all, Domain Capital built their whole business from this. So yes, they would say to you, there's a lot more desperate people than you think with good names. But so we do it all the time. You say there's no meeting of the minds of the lendor and the lendee. They're thinking every one of our transactions, there was a fucking agreement. So that's how we built this whole company. And they've done a great job at it, meaning they've actually had people come, they basically have clients that they have all sorts of transactions. Well,
That's what I'm
what do you
saying.
want
There
to say?
are exceptions, right? But if this is a real
It
thing, there would be
it's
20 domain
it's
capitals
not
out there, right?
well, there's a lot of folks that I mean, it happens more than you think. Let me just say something to what Terry mentioned earlier. Was when I took a portfolio to Braden, he's like, give me all the information about your 4-letter. Somebody go on mute. I want to hear myself. Um, give me all the data you have of all the 4 letters that you've ever owned, all the transactions, so he could see if I picked up these 1,000 names, what could I expect? Now he knows, he's smart enough to know all the transactions in the past may not predict the future. I may have sold all the good shit and now I got a bunch of shitty ones. So he knows that. But to give Terry, cut him some slack there, that it is true if you brought just a domain business. There's a lot of guys in this room now that have just domain businesses. If you were upfront with a banker and you said, look, I've only invested in domain names, I've made a living from it, 6 figures a year, maybe even 7 figures a year. Here's all my financials on my domain business. Still, who would be able to evaluate it properly? Even domainers who've done it their whole time can't really do it. So to think a guy at JP Morgan can say, hey, here's how much you've made off domains in the past with your portfolio. Here's what we can predict that you would make in the future. So we're willing to give you a loan against it. It's still just, a little far-fetched. Okay, who's dying to come off mute? Go ahead.
I do think though that, okay, sorry, are you from Domain Capital? I mean, just to
No,
be
I'm not from Domain
yeah.
Capital. No.
Okay, all right. But I mean, I do feel there's room for more Dan.com style open marketplace than, like with Domain Capital, it's more like, okay, fill up the form, we'll get back to you. Um there's no market force in the sense that you don't have third party, what you don't get like people, different lenders bidding for your thing, you know
Yeah,
you get
I
what
mean
I mean.
that's what we were saying about if there was an open marketplace. Basically, when things get tokenized and different peer-to-peer, a person that maybe he knows about domains, maybe he doesn't, but he wants to loan you money on a crappy name. You might think, I can't believe this guy's loaning me $2,000 on a name that is not even worth that. But like I said, Domain Capital, we refer to that because they've shown they get so much shit brought to them. They're telling people, take that to Goodwill. Take that to the Salvation Army. If you have something good that we like, real simple, we'll let you know. We're going to tell you, we'll loan you 10,000 on that. Many times, I would have to guess, there's not a lot of meeting of the minds there because people think, well, I thought I was going to get more. But we have heard of a gentleman, like I said, one recently, he took his name there, said, I want to get a loan. They said the max we're going to give you is 100,000. He said, I'll take it. They said, here's your interest rate, here's your payback terms. That's exactly how it goes down. So there is, and the reason why there's not a lot of those companies out there is because a lot of people don't want to deal with 99 of the names aren't worth loaning. They're willing to, they've done it for years. They're willing to go through the bullshit, and they've built a portfolio of names too from people they've just bought on the open market, but people that have defaulted on their loans. So they're one of the few that's like, listen, yeah, this is like firefighting. Not a lot of people want to do this. This is not something that's easy or worthwhile for most people. That's why very few are doing it. But yeah, so that's all I got to say. Hey, Samit, what do you have to say? Nice to see you.
Hey, so domains, there is an essential difference with real estate. Domains are a lease. Real estate can be ownership or can be a lease. Lease prices traditionally are 50% more than it's not the same as owning the property with domains. But again, all this talk about I'm all for on-chaining domains, and I'll give you my logic for that. The crypto market is $4 trillion. These guys are used to go to OpenSea and spending 40 ETH on a JPG, which they like, which catches their fancy. I am kind of hoping that domains go along the same route. They just say, oh, I like this domain. As it is, if you look at the sales that are reported in the last, or sales that have been reported ever, a lot of them will make no sense to you. I mean, I can very comfortably say 50, 60% of the domains I see sell, and for the prices that I see them sell for, I'm completely flabbergasted. I have no idea. I have no explanation. I wouldn't buy that domain, and if I bought it, I wouldn't price it there. So I'm completely amazed that those domains sell, which means that the market, in spite of our expertise, is a lot larger than we think it is. And by allowing liquidity by putting domains on chain, whether it's through Unstoppable or through Doma or whoever the guys are, NamingFi and Freename and all these guys, once the domain is on chain, someone can do a trustless, frictionless transaction online on the uh, marketplace. Like, for example, all unstoppable names are on Matic, and they're available to purchase through OpenSea. So there is a probability that in the near future, someone might just go and purchase it like they used to purchase, or they do purchase NFTs and other stuff. Even in OpenSea, even if you look at the NFT craze, fractionalization was there, but it was completely insignificant. Uh, Ish talks about getting loans on his board apes. Again, it's literally like three-letter.coms or two-letter.coms, you know. You're going with your two-letter.coms, which you got for cheap, luckily, but now they're worth a lot of money. So you're going to get loans. But I'm pretty sure 99.9999% of the NFTs out there, no one's going to be even willing to lend you $1. They might buy it from you for like $100 or $500 or $1,000 or whatever it is, right? And when there's a pump going on in a particular token or in a particular collection, NFT collection, whatever they're called, then you could possibly get much more than market value. So I'm just kind of hoping I'm not really looking at loans, I'm not looking at fractionalization. I'm just looking at enhanced liquidity through purchases on NFT marketplaces or crypto native platforms. And that's about it. I don't expect any miracles. I agree with Josh that suddenly people are not going to line up to buy your domains or to buy a percentage of it. I personally would never buy a percentage of a domain. And I'm also pretty skeptical about selling fractions of my domains for the same reason. I don't want encumbrances. The whole point of domaining is you own the entire asset, right? And it's your asset. You can do with it what you want. Why a lot of people in the domain industry also don't go down the investor route or the partner route or whatever. You might partner on auction, but that's a different matter.
Yeah, but I think this is where we as domainers, right, can actually come together and what. Let's say, for example, like AI.com, the guy who owns it used to work for me. I mean, long story, lah. But anyway, I mean, if you say there are certain names you wouldn't want to own fractionally, I think that would be an example of one that would be an exception to the rule, lah, correct?
Well, it depend on
We're
the
talking about
price.
Matic,
It depends on the price.
right?
I want to ask Josh something. Josh, if I have galaxy.com, I come to you and I say, I'm broke. I need $50,000. Would you loan me 50,000? I'm going to transfer you at Galaxy and I want to pay you back in a month and I'll give you 60 grand. And if I don't, you can have the name. Is that something you would do?
Yeah,
I
I would
would do
say
that
I
up
would
to
say his
Not
50
you.
I
salary
would
Yeah,
of
yeah.
I would
people.
say
Not
to
you,
you
Josh Lim.
I
Yeah, go
would
ahead,
say
Josh.
I would say
Sorry.
to you here's 50 grand, don't pay me back.
Yeah. Here's 60 grand. Don't pay me back.
I mean, I know you would want because what my point was, you would hate to have to come up with an agreement to say, "Fuck, now I got to put together a contract, a loan agreement," but it's so worthwhile that you would probably think, well, let's try to figure something out here. I know you need the capital. You say you're willing to pay me back, 20% in a month, but and if you don't, I get the name. It's almost too good of a deal to turn down, and so I can understand like and Josh saying he'd be willing to do that. Now he surely probably wouldn't be willing to do something like where I'm going to get 50,000 from you, Josh, and 50,000 from another guy. Now what happens if I don't pay you guys back? Now you're splitting a name. That's when it gets really confusing. And Samit says encumbrances, just weird bullshit. So I can understand where it can
Hey
make
Todd,
sense. Yeah,
hey
go
Todd,
ahead.
let me ask a Josh another one offer. Okay, Josh, I have 4-word domain name and it has 1 million backlinks. And would you give me $50,000?
No,
Which
because I'm
Okay,
not.
hold on. You said no, right?
Hold
So
on,
go and look.
hold on. I didn't finish. No,
Okay,
because I don't understand the SEO market.
that's right. That's exactly the answer I was expecting.
Okay, well, you didn't
Now,
let me
I
finish.
give you the live example. I give you the live example 2-3 weeks ago. IT Canada, itwordcanada.com in auction sold for $100,000 just because of the backlinks.
Yeah.
Okay. And
Somebody who
the
understands
one back,
the
hold
market.
on, let me finish. Let me finish. So this expert, I don't know his name yet. Expert came of backlinks, owns 500,000 domains. And I asked him the same question to him. I said, "Can you tell me what's this backlinks are all about, and where's this?" And he was talking big about backlinks. Okay, making 6, 7 figures from this
It was,
backlinks
I
every
think his name
year.
was Kalen, I think. Was it Kalen or
Yeah.
Kalen? Yeah.
Okay. Yeah. So therefore, and I offered him the same domain for $50,000. I paid $100,000 for that domain name. I didn't, but I'm just pretending. And I'm asking $50,000. He's not willing to pay that. It's been proven it was sold at the auction for $100,000. So when Todd offered a Galaxy.com, dog can understand this domain name, and you will jump on it and say, "Don't pay me back." I understand that. But this is what I'm saying. You're dealing with people now who doesn't understand the backlinks, and you're
Yeah, but
asking money, and you have a scenario.
so
So same thing with this fraction investments.
Rigu, you make a good point there, but the difference with SEO domains is that there is a liquid value based on the metrics, right?
Oh, you know that, and I know that, but
Amongst the people
the
who
bank
understand
doesn't know
SEO and
that.
who do the SEO, right? They're effectively end users, right? Because they're building up the site for revenue. There is a certain gambling there, right? Like they're not all SEO sites you can redevelop and make money from, but at volume they do the statistics and the probabilities and all that stuff, and they run everything through a formula, and they go, okay, this is worth this amount to me at auction, right? Which is going to be far more than the brand value that I would buy it at, right? Because
Arif, I
they're
understand
extracting a
that. So
different
coming back
commission.
to it, so let's say one name, which is a great name, doing business for last 30 years in business and making money out of this website, and suddenly they go belly up, and that name becomes available, right? If you take that name to the investors and say, "Look, this name being produced now, I understand the quality of the domain name and all that," and you take it to the investor and you say, "Look, it's a proven record of this domain name I just acquired, bankrupted, and you know what? You have lots more chances. But bare name, never been developed. You come up with an idea. Yes, you have a one word. Yes, all that bells and whistles, but it's still a bare name."
Okay, well,
If
yeah,
that
yeah,
group
but,
of
but we're talking
investors
about
are
hold,
SEO
hold on,
guys,
hold on.
you've
We're
got
talking
something.
about pure names here. Hold on.
Yeah.
I was gonna say we're talking about pure names here. And anyway, Callan, who was saying that, from what I gather, he spends $2 million to make 1 million. So I don't. The one thing that he did mention that was accurate was, yeah, many times they'll spend 100,000 on a name, really 1,000 on a name, if they can prove that you've already spent 40, 50, 60,000 on backlinks with The Guardian, with New York Times. Basically, there's some folks who know to get this many backlinks in Vanity Fair, New York Times, The Guardian, all these different publications, it's going to cost $50,000. So then they know it costs that much money to get all these backlinks. So they're willing to give you $1,000 for something like that, that they know for a fact, if they can prove the backlinks and they can show and they know they're active. So that was accurate, because many times that's why you see now, if you see somebody way overpay, then we don't know, why did someone way overpay for those backlinks? Why do they think they're valuable? But that's a whole separate thing. We're talking about pure domains here. And when it comes to, think about it, loaning somebody money on a domain name, most people, nobody's going to bring you a great name. Nobody's going to bring you a great name and say, like I said, galaxy.com, and say, "Hey, I got all these great things. I need 50,000 real fast. Would you be willing to help me out?" Well, if you use that as collateral and it's somebody who's like, "This is my only chance to get the name," and it's pretty solid. Either I get a nice piece of, nice chunk of interest back on my loan, or I get the domain name, then I think you would see. But those transactions are just few and far in between, and that's
Yeah.
why.
So, in other words, what you're saying, Todd, is this, which I understand. Maybe I'm wrong again. Uh, Pawn shop, you go to the pawn shop with a nice necklace, okay, the 22 carat, 24 carat necklace, and you say, I paid $20,000 for this 2 ounce of gold necklace, and I paid $20,000. You know what pawn shop going to say? Hell with you. I'm only paying you for the weight
That's
of
just part
this.
of your story. You're telling them what you pay, but they're going to put it on a scale and they're going to
Yeah,
tell you, "Here's what we
weight.
give per ounce." Yeah.
Yeah,
So
per
here's what we
ounce.
give.
That's it.
So
That's
if you
it,
spent
right?
22,000 or you spent 42,000, that's not going
Doesn't
to
matter.
change what we are going to give you for it. But the
That's
thing is,
right.
the pawn shop down the street may give you a little bit less, a little bit more, so you can shop around. But the truth is, there's just not many pawn shops in the domain space. There's only one or two, because they know, listen, it's just not worth it being in that business. These guys at Domain Capital run a tight ship, have done it for a long time, and they're
Yeah.
true domain investors too. They have a great portfolio. Go to their website, look at their portfolio, and you'll realize, well, shit, they got a fucking great portfolio, and they haven't got them all just from defaults. They are out there, busting ass too. But yeah, okay,
Yeah,
so we're
and the
going
bigger
for 5 more
problem is
minutes
that
today.
yeah, and the bigger problem is that the scale, right? You can't put a domain on a scale. The margin of error for even for people who are good at the business and successful at business is still fairly wide, right? The margin of error, like even on the 6-figure domains, is up there. Like, but where I think again, it might be a little bit more interesting is you like somebody who owns Galaxy.com, they're not going to risk their domain for $50,000, but maybe like okay. Let's say we all agree. I'm just giving you a number out of the of the air. Like I'm not saying it's Galaxy.com is worth $500,000 wholesale, but let's say it is, right? Then you go to the person. You go, okay, well, are you willing to give me $50,000 and I'll pay you back $60,000 in a month, or I'll give you 12% of Galaxy.com at the end of the month if I can't pay you back, right? So it's still at 20%, but that's where I think okay, maybe you might get a little bit more sort of usage or action on this type of thing. Again, like if somebody's house burnt down and they need $50,000, or else they have nowhere to live. That there are those exceptions, right? That you will have people who will do that. There are exceptions, but I just think most people who are successful in domain investing are not going to need this or even want this, because it's like the risk and the higher percentage of interest is going to make it like, yeah, okay, you're probably better off just selling their domains.
True. I do think I'm going to go to AJ. Thanks for joining us, AJ. I'm glad you snuck in here. We're closing down in 4 minutes. Is now there are a lot of folks that have bought names, 5,000, 10,000. They spent 50,000. Some friends I know spent some big money on names since COVID, say the last 5 years. And you know what? They didn't have the sell-through rate that they have. They didn't sell these names, and they have some great stuff, meaning it's pretty good. They spent, on the aftermarket some good money, and now they're needing some capital. So that's where you want to, you hate to see people desperate, but that's where there can be some activity. AJ, thanks for joining us. What's up? What comments do you have?
Hey man, it's Thursday and I see all my favorite internet people in one room, and I just had to say I love you guys. And I love hearing you and I love seeing you. The fractionalized thing is stupid. That's it.
Yeah, a lot of people are really feeling that way, and this all started because Elliot had a
Todd,
post
can
of
you kick this guy out for the room, man?
Elliot had the post saying really
Block him,
that,
block
and
him.
I thought it was similar to if Josh would have posted about it, and Josh agreed. He said, yeah, basically he's solving a problem that doesn't exist, but and then Fred jumped in and was trying to say there's other reasons why this makes sense, and Fred's not wrong. And then Terry gets on stage, Essential Domains, here saying, listen, he's saying what we all want, and that is we want domains to be considered a real world asset, or basically a true asset that's considered by these banks, financial institutions, basically just in general. We want these to be considered more as an asset, just like some of these physical assets, or maybe even other digital assets like the NFTs were at one point. But I'm thinking more of intellectual property that's digital type of assets. But anyway, so that's what started this fractionalization. It's not going to go away, but we're not going to talk about it next week. Next week I got 10 things that I wanted to talk with Josh about. Tell us why you like.org, about some things about CETO I wanted to talk about, and why there's always accusations without proof that, people make about certain extensions, why they don't believe that those are real sales, a lot. I don't know. Those are just some topics, but we'll talk about them next week. Before we shut it down today in a minute, Josh, anything you want to say to the group of folks we have here? Say something nice to these people.
I always say nice things to these people. Do I not? I'm pretty sure I do. Can I get maybe like a thumbs up if I say nice things to you, and a thumbs down if I don't? um, but yeah, no, I appreciate everyone being here. It's always fun doing these shows with you, Todd. I think you bring a good energy to the room, and hopefully, I provide some value here and there, and don't upset too many people. I know that I can't please everyone, Shane, but yeah, thanks a lot for being here, and we'll do it again next week. And I appreciate everyone that participates all the time. You know, Shane comes up, and really, it's great when he comes and participates. Mike obviously participates a bunch. Bruce, Arif, Ish, Josh, Mr. Media Wizard, even you, Ragu. I appreciate you coming up. Maybe next time we'll get Youssef up on the stage. But yeah, thanks a lot, guys, and I'll see you guys next time.
Yeah, and Josh, I feel the same way. I know that it's like corralling a bunch of wild animals because everybody's talking, but I love the opinions and I really appreciate all the people that are sharing. Terry, you don't come up here much. Essential Domains, really appreciate your attitude toward domains. I look forward to meeting you at NamesCon. Ish, it's always a pleasure, and I'll talk to you on Saturday morning when you do your room. Josh Lim coming in here, thanks. Arif, of course, Chad, Summit, and I really would like to hear next week. We do get a chance to hear from Shane every once in a while, but I see Michael Seiger here, Adam Strong, Adam Masonette, Yusuf, Paul. They come up every once in a while, but you see, as I see Kevin here, there's just so many friends. I can see why AJ wanted to stop in, but we love to hear the different perspectives because a lot of it is, obviously Josh and I, but then some of the same voices who we really appreciate. But it is interesting. We want to hear from, a lot of different voices because a lot of experience here. But thanks for joining us. We'll be here next week, 10 a.m. Pacific, 1 p.m. Eastern for the DNX show. And like I said, you guys can catch us right now on Spotify. And yes, Tiger, we're on Apple Podcasts too. But thanks everybody for being here. Enjoy.